should be up on the YouTube. Meeting technically starts in about a minute and a half, but if anybody's able to copy the YouTube link into the virtual trading floor to help us set up, I would appreciate it. Also, like Pat mentioned earlier, Pat had to leave early, so he's not going to be able to copy and paste questions from YouTube into the virtual trading floor. So if anybody else is able to do that, I would appreciate it.
Right, overall, right, that's...
He's going to go home and say, like, 2 weeks. That's what I would do. I'd be like...
What is that? Will I go over line by line with Oh, so
thank you, Zilong. Still got about 30 seconds here till we officially get started. Oh man, a little bit tired today. It was a good day.
We went to them and he was seen on Etna or Oxford, and then we switched to New Jersey, and then it only had Oxford or Etna, right? Oxford or Etna.
All right, 10 seconds. Boom, boom, boom.
Etna would pick us up where we left off, but Oxford would still be the 0.
All right.
So who crossed the 0?
My name is Derrick Oldensmith, and I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA/SIPC. All trades placed by me are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure. Another day of not adding any swing trades, but putting on a bunch of day trades today. Definitely, working on limiting my overnight risk a little bit. I had a lot outstanding at one point before the market pulled back here in September. So all that is going pretty well. Let's start by talking about the market like we always do. I actually think today was a great day for us as a team. The call-outs were super on point. But let's talk about the market first because that's where we always start. Just want to fix something here. All right, cool. I know that sometimes I gotta fix my screen so that people can actually see the symbols and the numbers on there. All right. So SPYs finished down. The S&P finished down almost 0.5% today. The Nasdaq is down 0.6%, and the IWM was relatively strong, being positive 0.5%. That's kind of the biggest conundrum of the day for me, is the relative strength in the IWM versus the Nasdaq, given that the TLT is up almost 2%. So interest rates were down today. TLT had a huge snapback past the ADMA here on the daily chart after this sell-off, basically negated 3 down days in a row here, plus some all in one trading session today. And the interesting part about that is, and I talk about this a lot, you got to be very careful about the narrative that the financial media places on everything. The financial media always has to have a narrative for every little blip movement in the marketplace. It's not always that way. Sometimes it's simply that there are more sellers than buyers or more buyers than sellers on any given day. Yesterday, the narrative was that the bond market, the rollover in the afternoon, right? We started off being strong yesterday. We rolled over and we closed really weak. And the narrative was, well, the bond market is closed, and the TLT, as we know, had been working its way down in a big way for 3 days in a row. Interest rates had gone up significantly for 3 days in a row. The narrative yesterday was the yields are about to be up huge as soon as the bond market reopens, and that's what is sinking the market. That's what everybody's expecting. And look what the TLT did today, right? It was basically literally the opposite of that. But even with that, we continued to have weakness. The fact of the matter here is the uptrend in the S&P 500, it broke in the beginning of September, and it hasn't been able to recover. The market has been in a short-term, medium-term downtrend while still being in a very big picture uptrend. and it's just been sloppy price action. I was excited a few trading sessions ago as a person who has generally been swinging to the long side, even though I've cut that back a little bit. I was excited a few trading sessions ago to see the S&P get back above 436, because 436 is the line in the sand right now where I think that the S&P goes from bearish to neutral. And we lost that 436. As of yesterday's close, we were kind of back in that bearish category. And if anything, at least as of right now, the high from October 7th here is another potential bigger picture lower high for the S&P. And it's also another potential bigger picture lower high for the NASDAQ that kind of continues this bearish feel of the market. I think that the NASDAQ, which is relatively weak today, becomes neutral above like 362.50. So we had like one trading session of the NASDAQ being back in neutral territory. Basically just gave us the next pivot high, and it's been working its way lower. Will this lead to a new low? I don't know. 350 was our last real pivot low. The more time that we spend up here in these wider ranging consolidations, the more time this 200-day has to slowly work its way up towards price action as price action comes down to it. A lot of people have been predicting a move to the 200-day, predicting it based on what? I don't really know, but people like to call out those big calls to big numbers like that. I don't necessarily do that unless I have evidence to support it. And the IWM here, which was relatively strong, kind of to my surprise, there's nothing to update here. The 200-day is completely caught up to price action. It has been in a range for literally the entirety of 2021, and it's still in that range. It was in that range as the S&P and the Qs continued to trend up for most of this year, and it's in that range still as the S&P and the NASDAQ kind of crack a little bit and come back down. So as far as today's kind of big picture game plan, at least as far as things related to the market go, I think we were pretty on point where we were saying we were opening up. It was a little bit tricky. Pre-market we were down a lot at one point. We could take a quick look at the pre-market price action here, just to take a look again. Pre-market we were down a lot at one point this morning early on. That actually had me a little bit more excited that today could be buyable. But by the time we actually opened up in positive territory. We grinded higher all morning, opened up with a very small common gap to the upside. And I kind of just felt that given this recent price action, it doesn't really give us anything to do. We need more clarity from the market, and that's what we're waiting for. But this is the reason why I love being a stock trader, is because when the market itself is more difficult, we can potentially go to other stocks that have better charts or in play, have news, have volume, whatever it is, to be able to focus on. And I got to say, as a team today, we were super on point. You could almost pick the stock that we spoke about in the morning meeting and bought it, and you basically would have made money. Almost all of them worked really well. My favorite chart for the day, my favorite call out for the day based on the morning meeting was MGM. MGM, we talked about a buy through 45.50 was my call out in the morning meeting. Basically worked perfectly. A lot of people on the team here were in this and crushed it. So I love to see that. So you take your buy here at 45.50 versus the opening low. And, the story here was just beautiful follow through. It combined everything that we're looking for. A really bullish chart, basically giving us a bull flag, combined with relative strength. It's been stronger than, Wynn and LVS and the companies that are casinos with the China exposure. It's been strong compared to the market, still holding up even as the S&P and the NASDAQ have pulled back. Caught the upgrade today, so it had news. It had the opening confirming volume through the level that you want to see. It had consistency to volume. Basically just perfect. So great initial momentum move. Had a 15-minute correction here at 11 a.m., which is typical for that time frame. Gives you that perfect pivot low into the ADMA with an inside 15 and up. I actually filmed a little lesson today that I'm going to get on YouTube soon about this pattern here exactly. This is a trend continuation pattern using an inside bar that I'm a really big fan of. And it just, 15-minute chart, correction to the ADMA, followed by continuation to the upside. Worked its way almost up to $49 today. So that was definitely the trade of the day. It was beautiful. We spoke about Tesla. I don't trade Tesla a ton, but we referenced the fact that this stock has been relatively strong, definitely compared to the NASDAQ, despite what interest rates have done. There's been multiple good trades here on the way up that we've discussed that are just pure technical trades. And then coming into today, had this bullish ascending triangle with $800 being a closing level that needs to break, and kind of the space between 805 and 807 kind of being that more absolute level. You still didn't get to close above the 805 to 807 area. You did get the close above $800. This one also, as an opening trade, was actually a little bit more difficult because it opened up above 800. So if you were long versus 800 initially, you would have gotten pushed out in this first 5-minute bar. But if you were able to have a little bit more patience on it and be able to be long versus this first pivot low, or I really like when you get the second candle here that gives continuation, and the second candle has even higher volume than the first candle. That doesn't happen too often. See, it happened yesterday as well. It doesn't happen too often. Typically, it's the first bar and the last bar of the day are your highest volume bars, and the reason why volume is typically higher in the first and last bar of the day is because it settles the opening imbalances and the closing imbalances with one large opening and closing print. So it makes that volume on those bars significantly higher than they kind of would be otherwise. So if you're able to have your second bar of the day trading on even higher volume than your first bar of the day, that's settling that imbalance, that's just a really good sign. So Tesla, as long as you didn't get pushed out on that initial tail down below $800, was also one that worked out really well today. DNA, I'm kind of annoyed at myself for not being in this. This was another one of my call outs today. It had the short report come out on it on October 6th. That low is $9.13. And then today, one of the sell-side analysts came out and initiated it. Again, I think as people know, I don't really care too much about what analysts say or think, but I do care that an analyst action can put a stock in play. And as much as I don't care too much for analysts, I did think that it was interesting that I would assume that this analyst, if he's worth even a tenth of his salary, took the time before initiating DNA with an outperform of really reviewing the short seller report that came out this day and crushed it back down. So I mentioned today that you could be long this kind of as an opening trade versus this low of $19.13. And if you're able to capture that, this one also turned into just a beautifully uptrending stock throughout the day. I mentioned CRISPR and NTLA in the morning meeting. They had similar patterns. What is happening to this CRISPR here after the close? Is it getting wrecked right now? Yeah, CRISPR looks like it just had news after hours. So hopefully no one swung it. As an intraday trade today, it worked okay. My concern on both CRISPR and NTLA was that they're trading right into the 8 and 21 EMA on the daily chart. So I usually don't like buying weak stocks right into their moving averages. But you have an inside day here, and this space between a little bit below $100 has been really big support for CRISPR. So I do like an inside and up into a support area, and I do generally like kind of what this company is doing. So the CRISPR trade basically above 101.34 was your buy. So that was kind of an opening drive trade that basically happened right away in the beginning of the day. Gave a fantastic initial momentum move, but eventually rolled over, and we did have market weakness as well today. So you probably actually got pushed out of this when it broke its opening low at 10.15. But still, a decent opening drive trade where, depending upon your level of greed in your game plan, you should at least be break even, if not, making decent money on it. I traded this BNGO today as also an opening drive trade. This thing had some news. This is another one of the bubble names from last, January, February. And I said this a bunch of times in the past. In a lot of ways, last February was the real top of the stock market. I know that your S&P and your NASDAQ and Apple and FANG stocks have continued higher. But as far as like the speculative nature of the market, what we saw in January, February of this year was almost like nothing I've ever seen in my career, with just the amount of stocks that were giving these insane moves. I mean, this is one of the craziest ones. This BNGO going from under $1 to $16 over the course of basically a 2-month period of time. I don't know if the stock belongs to the dollar. I know it probably doesn't belong at $15, $16. You can pick almost any of those stocks that were in bubbles in January and February, and their highs there. The stocks really don't belong at those prices, and I was saying it at that time that these were bubbles. So obviously the bubble burst. A stock like this BNGO went from $16 back down to $4 or $5. So I don't marry these names. I'm not in love with them. But when there's news, I understand that these things can squeeze higher very quickly in very short periods of time, especially with the volumes coming in. So we had some news. I was originally saying in the morning meeting the space between 550 and 570 is where I would want to buy based on the big picture. But when you get this opening volume coming in like this and you get this opening momentum that's like this, that's when I'll kind of cheat on the bigger picture level based on the smaller picture chart. So I think I came in and I bought a bunch of stock like $5.32 or something like that. Nice initial move here. $5 stock. I'm taking on 6-7 cents worth of risk, and it gave initial follow through of 20 something cents. So it's okay. But then I trailed this one pretty tightly. Like I trailed that ANY pretty tightly as well. Part of the reason I'm doing that is because I don't love this company. I don't really know anything about it. Same thing with ANY. They're just kind of momentum trades. I'm just trying to put a few bucks in my pocket. So when this thing rolled over, I stopped myself out of it relatively quickly. I was using this low here at 945 to get stopped out at. So I got stopped out here, so I wasn't in it for the rest of the day. It didn't close great. Nothing really to look at. If the thing wakes up on volume and starts clearing those levels, we can go back to it. So again, nothing to marry here. I think DKNG is worth highlighting, even though I didn't trade it today. This could be a trade for tomorrow. DKNG got downgraded or initiated with a sell, I forget, and while Penn got upgraded and initiated with a buy by the same analyst on the same day. So it was kind of interesting. You don't really see that happen too often, where an analyst will take one stock in the sector and not like it, and the other stock in the sector and like it. Again, I don't overly care what these analysts say. I think we all know that, but it potentially puts the stock in play. And in theory, this DKNG really should have broken down and failed today. It's kind of been building out a bearish consolidation. I do generally like the company, but it's been building out a bearish consolidation. The ADMA is totally caught up to it, and it kind of got this gross downgrade or sell initiation today. You would think that would lead to a breaking of $48 support, especially when you don't even have the market backing it up, right? The market was weak today. But even with that, the stock was able to be relatively strong. It didn't break down. It held 48. It gave an inside day. So I should think that we could look at this DKNG possibly tomorrow for a trade for an inside and up type of situation. I normally don't like inside bars within a period of consolidation. I like inside bars in periods of trend and momentum. But just the fact that this thing was able to not break down on that news, I think is really solid. So again, that's pretty much all I've got. No real updates as far as this market goes. We're still waiting for market clarity. The S&P and the NASDAQ are certainly looking pretty bearish. The Russell is certainly, still looking a lot more neutral. But even with, a trickier tape here on the big picture of the market, we picked our spots really well, and some of the trades that we discussed today worked out really well. So, I in a lot of ways, I can't be happier with the performance. When the market's trickier and we're still able to find all the right spots to be able to make money, I love it. I absolutely love it. So that is all I've got. I don't really got too much. So I'm happy to take a look at any questions that you guys have. First thing I am seeing here is a question about SOFI. Can SOFI reach mid-June levels? Yeah, I think so. My target on this is a move to $24, and that's been my target on it. It's a bigger picture move, so I think so. Is it going to get there overnight? Is it going to get there tomorrow? Probably not. I don't even think that you could count on the continuation that it gave today. It had a really big day yesterday. SoFi was the trade of the day for yesterday. It was the idea of the day for yesterday. It worked out fantastically well yesterday. I don't like buying day twos, even if the day two can give you some continuation. Day twos tend to have a worse risk reward and lower probability of success. But even with that, SoFi today did give some follow through for the people who are in from good prices from yesterday, like me. So I'm happy about it, and I'm looking for continuation on this thing, but it needs time to reset up for us, right? Stock went to $19 today. ADMA on the daily chart is at 17 and change. So you're looking at a stock here that's extended by $1.70 and a $19 name. Let's have some patience. Doing the right thing. The volume here is perfect, but let's get a better setup here for us to potentially re-enter the stock. Rich is also letting us know that MGM had an inside weaken up. Let's take a look at that. Yes, I didn't even see that. This is a whole nother extra layer of probability on the side of the MGM trade. Inside weaken up. Absolutely good stuff. Textbook. Multiple time frame continuity for sure, Rich. This MGM had like literally all the layers of probability that I'm constantly talking about. Had literally every single layer of probability on the side of the trade, plus the risk was reasonable. Almost an A+ trade, if not an A+ trade, MGM today. Solid. Nikola even looking better. Yeah, I saw Nikola approaching $11 today, having this huge move up to $11. And I was like, oh my god, like I kind of want to buy this because I really think that they could squeeze the heck out of this stock to the upside. But I didn't want to chase this thing at 11 when it just ripped 50 cents in 30 minutes. Not a company like this. So Nikola for sure is looking better, even though this is basically the company was a fraud, right? I mean, that was the whole announcement that destroyed this. I think the CEO is like getting arrested, but somehow the stock is still around. And I remember saying back a couple of months ago that they won a government contract, and I thought that was really interesting because I would like to think that the U.S. government, as much as it can be a disaster, would at least be smart enough to do research into a company to make sure it's not a complete fraud before giving them a government contract. So if you got some sort of backing from the U.S. government, that kind of gave me a little bit of interest again in it. But we need that interest to be combined with price action. We know that this could be a big short squeeze type candidate, and $11 had been a spot that I was looking at for upside continuation. I want to buy these types of stocks high in order to sell them higher. They're momentum names. I just didn't feel comfortable buying $11 at this time after it had just ripped up 50 cents. But yeah, for sure, looking better. Mr. Steve NYC, a few days ago, the FDA placed a gene editing study being performed by ALLO. Is that a public company? On hold. It's good information. I didn't see that. CRISPR uses different technology, but it raises some safety concerns for gene editing. Thank you, Mr. Steve. I was not aware of any of that information, and it is really good information. This CRISPR is a stock that I swung back in 2017, and I caught a lot of this move here because I thought that I had just learned about it. I remember learning about this gene editing technology, and as most of you guys know, I really don't like trading biotechs because it's just I'm not a scientist, I'm not a doctor, I don't feel like I have an advantage here. And from a swing trading perspective, which scares the heck out of me, it's always the biotech that you see like gapping up 400% or gapping down 95%. And as much as I would love to be in a company that gaps up 400%, I'm not willing to risk being in a company that gaps down 95% to get it because it could destroy me. But I remember I'll sometimes do it if it's a very cheap one. And I remember learning about this CRISPR back in 2017 and being so interested in what they were doing. And it was $19 stock, and there was a breakout here around $20 or so. And I bought it, and I went for this entire ride. I think I rode this thing all the way to its $75 high. I think I got stopped out on the way down on the break here at like $50-something. So I gave it back a lot, but still had a really good trade in it. So I've had some interest in it ever since. But ever since when I got stopped out of it, the thing kind of died here in 2018, 2019, and then finally, woke back up here in 2020. So I do think it's one to pay attention to. I do think that the technology is interesting, but the information that you just provided there about ALLO getting put on hold by the FDA is certainly interesting. Next here is from Eric. With swing positions, do you day trade them the next day or only look at the daily chart for your out? For example, with SOFI, and I'll get to in a second. Would you have just set your stop at the previous day low, or would you move the stop up if the 15-minute chart for the day shows a good pivot? Okay, sure. So first of all, when I commit to swinging a position, I generally commit to trailing it only on larger time frames like daily and weekly charts. I no longer will typically trail them on a 5 or a 15-minute chart because the time frame is too small. I don't think that it's worth keeping the position overnight and taking on overnight risk, which can be very significant, just to continue to trail it on a 5-minute chart. That risk reward doesn't make sense to me. So I'm going to end up getting stopped out on a 5-minute or a 15-minute, trailing stop, but I took on overnight risk in order to keep it. So generally, if I'm keeping an overnight position, it's because I'm doing something bigger picture, bigger time frame with it. And then, yeah, for me, for my approach to trading, I very regularly, somewhat heavily actively trade around core positions on a day trading basis. I mean, I can just show you, as much as I was telling people to not initiate new positions in SOFI today, doesn't mean that I wasn't very actively trading it, right? You can see my execution dots. I think I called out like this buy perfectly. This was a little bit of a bigger ad for me in the 1780s. I called it out to the team. But a lot of what I'm doing here is what I call an add back as opposed to an add, right? So when you're adding back, you're taking back your original risk plus keeping the difference. When you're adding, you're taking on new risk. So, these green dots that you see here where I'm buying back stock, I'm buying back stock that I sold primarily yesterday at much higher prices, right? Like I sold stock at, like $18.50 yesterday. So let's say that I sold stock at $18.50 and I rebought that stock at $18. I'm basically retaking my original risk on the trade, but keeping that extra 50 cents, right? So if it's a 100 share buy and I'm keeping that extra 50 cents, then it's putting, I have my original risk plus I put an extra $50 in my pocket. So I do a lot of that. I do a lot of, active trading around swing positions. That's definitely a big approach for me, and I like doing that because I feel like I kind of know and understand these companies well. I understand the levels well. I understand where they should hold because I've already been in them. So that lets me kind of day trade them better and kind of, basically what I'm doing there is I've got these swing positions. A lot of times they're bigger picture ideas, right? Like I am looking for a move to $24 in SOFI. So it's a bigger picture target that I have, but I want to be able to make money at the same time. Like even this MGI that I've been in forever with Stefan. Stefan loves the company from a fundamental perspective. I think that we're originally in this thing, or at least I'm originally in this thing from like this 550 kind of area from last year. I think actually from November or so of last year, like October, November of last year. So I've had a price target on this thing of $17 for a long time, and I've been in it for a long time, and it's worked its way as high as 12.50 almost, and that's great. And there's been a whole lot of volatility over time here on this process. So for me, I got this bigger picture target of what I'm looking for, $17 in MGI. I don't know if it'll get there, when it'll get there. I know Stefan, who is has a really strong background, is a really good part of the team, is really good at his fundamentals, is definitely a believer in this thing, and his call-outs, his ideas have made me a lot of money in the past, so I'm really appreciative to have him on the team. But I'm not just sitting here every day just waiting for it to be at $17. I take stock off in the up moves. I take stock back in the down moves. I keep the difference as basically cash flow money that I'm putting in my pocket, and that makes it so that this type of position, even though I'm originally in from like a good price here of $5.50, I've made so much on the in between that I don't know where this thing would have to go in order for me to get back down to break even. But maybe it's like $3.50. So that basically, and like even Bed Bath & Beyond, like the reason that I'm still able to be in this Bed Bath & Beyond is because I made so much money trading this into these moves that I get heavier, I get lighter at certain spots, and obviously this earnings report, I've said it multiple times, was one of the worst earnings reports I've ever seen. But even, with this thing pulling back from, $30 to $14, I'm basically still in the money on it because I've been able to make so much on the in-between over this period of time into these, big rushes that it had at the big short squeezes. So that is a lot of my approach. It is why you'll see me in certain swing positions, sometimes for really long periods of time, because I think as a lot of you guys know, I love risking the money that I've already made in order to make more. That's what I love. I hate the initial risk. When I first press that buy button, and there's a chance I just bought that absolute high and this position goes against me and I end up losing money on it, I hate that more than anything. But risking money that I've already made in order to make more, that's what I want to focus on. I absolutely love doing it. So I think that answers your question there, Eric. Thank you for the YouTube post there, Dylan. I did not, Natalie. I did not get involved in it today, unfortunately. Can check Airbnb today for Steve, for sure. Yeah, Airbnb, definitely a company that I love. I consistently want to be involved in this. I'm a little bit annoyed that I'm not involved in it. We called the buy on this day back on August 24th, and it hasn't looked back since. So it's been a good one. Big fan of the company. It's actually, even though I haven't traded it in this entire multiple months here, I think it's still my best stock of the year because I crushed this move here to the upside. I'm sure you guys remember me loading up on this thing at around 125, and similar to some of these other names where I've got these really big price targets on it. I was loading up into an Airbnb at 125 on the fourth day or so after the IPO, and I announced I had a price target of $210. And I was able to capture that entire move and trade it back and forth and did really well with it. I've kind of been out of it ever since, but I do really like it. It got an upgrade. My concern on the upgrade was the technicals. I wasn't crazy about the technicals because you had this candle 2 trading sessions ago. I thought it kind of got a little bit sloppy in here and was building it out a wedge, though obviously the upgrade itself puts it in play. I mentioned I was only interested in it if it could actually get above the high from 2 days ago, which is 174.10, and it did actually do that. My concern on when it actually broke that high, though, at 174.10, was just the degree of the move and the degree of extension it had by the time it got there. By the time this thing broke 174.10, it was just super extended on every time frame. The 5-minute here is super extended. If you're giving it to lows, you're risking $3 plus in the stock. The daily chart here, by the time you're breaking this 174.10, your ADMA is not even at 170 yet. So I still decided to be patient and kind of stay away from it. It's there's a handful of stocks that are out there right now that I want to be in, but I'm not, and this is definitely one of them. It didn't close well again, though. Got above that 174.10, could not close above it. Obviously, the market was weak, so maybe that weighed on it a little bit as well. It's still extended here above the moving averages. Kind of medium picture here. It definitely still looks good. It definitely still looks bullish. But this candle here is maybe signaling that it still might need more time. So, really, I would like this thing just to set up better. I just don't love this setup here. You got a big range right now between 160 and 175. I want this to tighten up and give a little bit of a better trading setup in it. Yeah, I definitely agree with you on that, on Mike, on Nikola. I was in Nikola, speaking with Dylan about it earlier, I was in Nikola pre-SPAC, and did really well with it, but maybe not that well. I had this thing at $10 here, and I think I got out at 18. And then, 3 days later, it was at 35. And then, a month later, the thing was at 74. And then they announced that it was basically fraud, and they destroyed this thing all the way back down. I really haven't traded any of that. I caught that nice initial move. I don't even remember what the symbol was, the pre-NKLA symbol on the SPAC. But it was a good one. I haven't done anything since. I still don't love it, but I thought that the government contract information was interesting, and we definitely know it has the ability to short squeeze. So I'll take it as a momentum trade if it comes. Pat asked someone to post on YouTube, so I am. Okay. I think he more meant think he more meant that somebody in the VTF, if they could copy and paste the YouTube questions into VTF. I don't actually see the YouTube when I'm doing this in real time, so I'm reliant on people who have VTF access to copy and paste YouTube questions into the VTF. So if people can continue to do that, I would appreciate it. No problem, Eric. Chabu Dai saying DQ. Is that a symbol? What is DQ? Oh, this is a Chinese company. I don't really have an opinion on this one, to be honest with you. My interest in the Chinese stocks is the majors, which apparently we saw Jack Ma today, right? He's coming to Hong Kong or something. Like Baba, like JD, like Baidu, those are the Chinese names I have an interest in. I don't really know DQ as well. I don't have an opinion on it. Had 2 really strong days in a row. Here, look, another stock that topped out in February at the top of the market. Had a huge kind of bubble move here as well. $40 to $130, pulled back to 50. Now trading back up to 65. I don't know. Nice 2-day move in a row here, but I really don't have an opinion on this one for you, unfortunately. I don't know the company well. It's solar. Yeah, I mean, I know JKS better, and this JKS has been a nice trading vehicle in the past. Sunrun gave a big move today. I'm annoyed that I didn't catch this. Sun Power as well, SPWR. SPWR also gave a really big move. I do think that China is going to be continuing to focus on renewable energy, so it does make me like JKS a little bit. DQ I don't have as much of an opinion on, but solar's performed well today. Thanks. I'll keep an eye on it. Cool. Anybody else have anything? Were there any other questions in the YouTube that I missed? If so, if someone could copy and paste them, I appreciate it. Otherwise, I'm going to wrap things up. I'll give it about 15 seconds or so here. See if anything comes into the VTF. Okay. Looking like no one else has anything, which is fine. I don't think that there's too much to talk about. I mean, you know, the market is a little bit difficult right now, but we're doing such a fantastic job picking and choosing the right names, even in a tougher market for, you know, a couple days in a row here. So, awesome, Nick. No problem, gang. Love working with all you guys. You know, we're really building out a strong team here in the Pro Desk VTF, and if you're just watching the afternoon meetings on YouTube, you know, you're missing out on these ideas that we had in the morning meeting today. So get involved. It's neutral, I think, more Natalie. You know, you got your SPYs and Qs that are short and medium term bearish, but big term bullish, and the IWM that's totally neutral. Good stuff, Aaron. Enjoy that. Can you revisit the... So from Steve here saying that someone on YouTube said, can I revisit the logic behind your trades in SOFI today? Sure. Yeah, so again, really important to understand the difference between an add and an add back. An add back is taking back the risk that you already had on in the trade. An add is taking back new risk. I am not getting heavier in SOFI compared to where I was yesterday morning. I am just taking back some of the stock at lower prices that I sold at higher prices yesterday, and again, basically keeping the difference. So let's just say that my stop loss is yesterday's low, all right? And let's say I bought at 17 yesterday, and that's all not exactly accurate, but I just want to keep it simple. So if I'm in from 17 yesterday versus that low, actually we talked about being long versus 1670 yesterday, and actually the buy was at 1688. So you could be long this thing for 18 cents based on the call out yesterday, 18 cents worth of risk. So at a certain point here, you know, let's say you bought, I don't know, 5,000 shares. Again, what I'm doing here, and this is why I don't go over this in too much detail, because it's not appropriate for everyone. It's heavily dependent upon, you know, the size account that you're working in. Like, smaller traders with smaller sized accounts really don't have enough size where they can do kind of what I'm doing here. And what I really try to do in the afternoon meetings is try to provide information that's going to be beneficial for everyone, whether you're working with, you know, a 7-figure account or a 4-figure account. For me, I have pretty big P&L swings. Like I'm regularly swinging 5 figures a day. Compliance isn't like for me to speak about my exact numbers, so I got to be careful about not having any compliance violations. But I think it's not a problem for me to say kind of broadly that I'm regularly having 5-figure swings a day, not 6-figure swings, 5-figure swings. So having 5,000 shares or more in a position like SOFI is definitely not out of the ordinary for me. And once the risk is covered, that's when I want to be a lot greedier on the position. So let's say that at 1850 yesterday, I still had 3,000 shares, something like that, and I take a couple hundred shares off. Let's say I take 200 shares off at 1850. I can rebuy those 200 shares at $18, still have the same stop loss. So I've still got the same original risk as I had when I sold that stock at 1850, right? Because I bought that shares back. But I keep the 50 cents difference. So for every 100 shares I do that on, it's $50 in my pocket. So if a stock doesn't go straight up, like if I got a bigger picture target of $24, if the stock doesn't go straight up to $24, if there's a lot of volatility in between, which most likely there will be, I can potentially work my positions back and forth a little bit for cash flow. So for example, if I sell a couple hundred shares at $18.50 and I rebuy that couple hundred shares back at $18, let's just call it 200 shares, I just put $100 in my pocket while keeping my same original risk, less the $100, basically, right? And if I can then do that again, well, then that's another $100. And if I can do it again, that's another $100. So if I get enough volatility, it can enable me to be making cash flow back and forth. Sure, if it does go straight up to 24, I risk missing, $6-7 of upside on that couple hundred shares, but it's a balance between making money off that volatility and just capturing the straight up move. So one of the things that I really encourage people to do, and this is what I spent a ton of time doing myself, is playing with spreadsheets. Spreadsheets are fun. Spreadsheets and game planning and figuring out all different scenarios and how a stock can move over time. And just playing with different ways on, well, what would my P&L look like if I did this and it did this? All these if-then statements. What would my P&L look like if I did this and the stock did this? If SOFI goes straight up to $24 to my target by the day after tomorrow, then it's probably going to cost me more money than I made if I took off a couple hundred shares at $18.50 and rebought it at $18. But with this degree of extension that the stock now has on the daily chart, I would say it's a lower probability thing, and a higher probability thing would be to see a lot of volatility come in here as these moving averages catch up. So if I'm able to sell, $18.50 and rebuy $18 or whatever, and I'm able to do that multiple times, each time I'm doing that, I'm putting $50, $100, $200 in my pocket. In time, that could make up for not having that same amount of stock while still having a core position at those higher prices. Or if my trade eventually fails and comes down and stops me out, then I was able to make more in the process because I did that, right? So think about every possible action that you can do with the stock and every possible action that the stock can do. And in what scenarios would you make more money and less money? And then what are the probabilities of all those different things happening? Think about all that stuff. One of my favorite things to do, I've said this in the past on a number of occasions, we don't do an afternoon meeting on Fridays. Why? I used to be a professional athlete. I used to fight professionally, and Fridays was my sparring night. So on Fridays, I leave the office at 4 o'clock. I take the train out to Long Island where my trainer was, and I get my work in and all that stuff. And even to this day, that's why we don't have these afternoon meetings. One of my favorite things to do is after those really hard workouts on a Friday night. Think about what you guys are doing on Friday nights. On a Friday night, I loved more than anything else. After I had a great workout, I got all the endorphins going. I would just sometimes depending on if I was in training camp or not, maybe I would grab, like a just a beer, a single drink or something like that, and I might have, a beer, and I would plot myself on the computer, and I'd sit in front of a spreadsheet, and I would just do and play with all these numbers, and it enabled me to create all different types of game plans and different things that I could do, and then one of the big keys to successful trading that I'm always talking about is game planning, right? Game planning and risk management. Those are really the keys to this business in a lot of ways. So think for yourself about all the different types of game plans that you can implement based on where you are in your career, your account size, your maximum tier size, your capital access, and what you can do with that to minimize risk, maximize reward, and different ways that you can do it. And what that leads to is, me doing, a lot of what I described in certain areas. So that is the answer to your question. Rich asking a clarification. What's the difference between cash flow versus add back? Or in other words, doing what I'm doing there for cash flow is adding back. So I don't really think that there is... Okay, cool. I see. You already said I answered your question. All right, cool. Perfect, gang. So I think I covered it all. Have a great night, everybody. I will see everyone tomorrow.